Hey, it's your girl Tila of TilaHolcomb.com and creator of Trade Your 9 to 5, where I teach burnt out employees how to trade their 9 to 5 in the stock market so they can stop living the American dream. Today, we're talking about what is amateur hour and why you should avoid it. Amateur hour is that first hour of the trading day. For us West Coast peeps, it is 6:30 a.m. to 7:30 a.m. and for the East Coast peeps, 9:30 a.m. to 10:30 a.m. During that first hour of the trading day, there is a lot of volatility or a lot of fluctuation in the stock prices. That high volatility is because of a lot of orders that were put in the night before and the morning of, like just before the market opens. So all of these orders being put in are usually put in by those who are new to the stock market. They're new traders or new investors. And so they put in these orders at what is called a market order. And a market order is simply saying, I want to buy this stock right now at whatever the price available is. And when there is a high demand or a lot of orders in there for a stock, there is a person on Wall Street that's called the market maker. He comes in and he sees all these orders that need to be filled, and what he will do is just go through and fill them all first thing in the morning. He just fills them all. And so that high demand in supply is like, driving the price either up or down. So while he's in there just filling those orders, as soon as the market opens, you'll notice that there's a sudden spike either up or down in stock prices. This spike is usually initial, like I said, during that first hour, you'll see a huge spike in the market, and then it'll start to kind of lull and kind of correct and go in maybe the opposite direction, or it just kind of flattens out a little bit, and then it starts to do what the market is going to do for the rest of the day. That's going to be the kind of movement there, the normalized movement for the rest of the day, unless there's some type of news that happens throughout the day. So with that, if you've ever bought a stock first thing in the morning or put in an order to sell in the evening, and when the market opens up, you were excited because your stock jumped up and you felt like, wow, I'm going to make some money, but your stock jumps up, you think it's going great, and then all of a sudden it starts to go in the other direction. And you kind of feel like you're on a roller coaster there, because it was up 1 minute and then now it swoops down the next, and you're not sure what's going on. Well, if you've purchased during that first hour of the day, then that is what you're experiencing. It's considered amateur hour, and that's kind of what happens. So if you want to kind of avoid that little jolt on the roller coaster, I recommend you stay away from that first hour of the day, which is called amateur hour.